Hello friends, how are you? Vladimir here, and this is the weekly review for 21st of October 2012. Well, previous week, mostly was boring, without any special events until Friday. And on Friday, mainly on indices, we got the bears again. As you might remember, I said not once that based on weekly charts divergences on the indices, we should get a bearish move. The question is how it's going to be right now before the elections or right after the elections, and it's still a big question. We will see the indices later, but for me, it's kind of preparing us for some bearish period. But before talking the long runs, let's see the shorter term opportunities we are about to have, and they are mainly the Aussie pair. So let's take a look. Aussie Canadian, from my point of view, is acting very interesting, and I will explain why. If you pay attention, we got a strong down move. We got a bullish divergence. Then after a kicker, very nice kicker, not classical as it did not close where it should, but we got a beautiful move from band and almost covering the band right now. Plus, we have, since the very beginning of the move, we have a hidden divergence forming, which means there is a room to look for sell opportunities. For that, we have to go for 4-hour charts, and on the 4-hour chart there is a perfect setup. We have more than 20 candles right on the Bollinger Bands. We have resistances around. We have a continuing divergence. We have RSI dancing around the extreme, which guarantees us very soon some very deep correction. Now, deep correction could be to the opposite band, or a deep correction could take us to the trend line, which could be even better. So there is a room to go. Maybe even it will be more than that, but that's the minimum the pair has to provide us. Now, where it could stop, there is a resistance right now, 102.50, sorry. There is a bit higher, around 103, and the third resistance that we have to pay attention to will be right here on 104. So 104, let's even protect it a bit more. 104.40 is kind of the last level that we have to pay attention to. And from this range, something bearish is about to begin. That's the first pair I think we all need to pay attention to. Aussie Kiwi is creating pretty much the same. There is a bearish hidden divergence. There is a band to band move, not classical, as there is an interruption right in the middle. Still, we can sense the bearish pressure by the hidden divergence. Stochastic is reaching oversold while RSI still no. That means that the pair still has a room to go. Maybe even not. Now we have a beautiful trend line here. So that's the maximum we could allow it to do. We can see we have a resistance right here. We have a resistance a bit higher, and that's kind of the third resistance we could allow. So on a range of 150 pips from here, the pair should provide some sell opportunity. How could we join that? We go for the 4-hour chart and we are looking for sell opportunities there. There is a hidden divergence already, but as I said, because of the daily chart, it seems that there is still a room to go. So pay attention for the next levels like 127.20, 127.30, maybe a bit higher even, and the next top of this 4-hour chart divergence. That's what could and should happen. Then right after that, I could expect a move all the way back to the lower trend line, which means there is a room to go. If it begins from here, there is a room more than 100 points to go. If it begins from higher, there is a room of more than 200 points to go all the way down. So the thing is, what should we do in case it does not push up? Then that's the last level that the pair successfully holds, breaking below this level, which is 126.25 approximately. And again, don't pay attention for the exact pip, it never works. breaking below this level should open the doors for the move down, and well, that's my expectation for this pair. And of course, this is the minimum, right? Because it could go and push all the way to the previous low, which is 120, below 124. Also, always a possibility for a final target. So pay attention for that. Now, before I continue, a few words about the Euro Aussie and Aussie Franc. The pairs are acting bearish. I'm not convinced though that this is the end of the bullish move. Watching the weekly chart, it seems that this is a period stop, partial stop before trying to push bit higher and then making a down move. Now, this was a kind of bend to bend move, so it could push at least to the 20 MA, which means around 121, 122, or even lower. Stochastic is overbought, so that's what could work with that. But I'm not convinced this is the end. It could go and make another push before making deeper correction. Even if we take a look on a daily chart, it seems that the pair has difficulties to break below the 125.50, 125. It has very, very serious difficulties. Now, it could still happen suddenly, and we so many times. And if we measure the whole move, there is a room to go for the middle of this move. There is a room to go easily. The question is how it's going to happen, and I'm not convinced it's going to happen straight. Maybe we will get another push up for 128 as we discussed, maybe even higher, 129, 130. Just going and continuing with this amazingly power divergence. And if it does this move, then the cover will be much, much, much stronger. So for long run, I still suggest holding this pair. Of course, the same one will be the Aussie Franc, which is the opposite to the Euro Aussie, and Aussie Franc would be a buy. Here we're going for a sell. The swap provides some extra bucks to the pocket, so no reason to look for any, I don't know, get out ways from this pair. There is a room for a bearish move, and technically it shouldn't could go. Pound Aussie also, after a beautiful divergence, it's making the move. It's not classical bend to bend one, but we can see RSI cross below 50, which means it has it could go easily to gain a bearish momentum. So from my point of view, there is a room to go for 153 again, maybe even lower for the Pound Aussie before deciding anything else. The only thing that we need to be aware of is a potential bullish hidden divergence right here in stochastic, which combined with the 4-hour charts, if it makes the another push down, could provide a retrace before pushing down. So need to pay attention, need to be aware of that. As I said about all the Aussies, I'm not convinced that this is the end for them. Same about the Pound Aussie. I'm not convinced that this is the end. There is a room for a bearish move. I do not want to close my eyes for a potential retrace even for a new high before making much stronger down move. All could happen. Pay attention and be aware of the daily chart hidden divergence with the 4-hour continuing divergence forming on the Pound Aussie. All Aussies pairs, as you could pay attention, are very, very, very interesting. Another very interesting pair to pay attention to is the Aussie Yen, which from my point of view is playing right now, and there is a room for that for an up move. Pay attention. There is 20 candles right. There was no divergence, so it's just making a correction. This correction could be to the opposite band, or it could be to the trend line, whatever come first. Seems that the band will be first. But it could even not do that, because it could stop on the 20 MA, which it's right there, right now. It begins, there is no hidden divergence yet, but it begins to create hidden divergence. And if you wonder why there is no hidden divergence yet, because the stochastic did not create lower low right now. And on the 1-hour chart, we then could go and look for buy opportunities. When the 4-hour charts will have hidden divergence, then we have to go for the 1-hour chart and pay attention for continuing divergence. It could happen on the support 81.75, it could happen on 81.35, or it could happen even lower. So anyway, if you followed, then on the blog I posted here a correction time. It was on 18th on Thursday evening. that we should go for 81.75 or at least the first correction, and I hope you pay attention for the blog because there are always updates there about interesting things. And here we go, 81.75. Well, done on Friday, right? So from here there is a room to go and push bit lower before retracing the whole way up. And this is a very, very interesting pair to follow for buy, not for sell. It was for sell from the top. Now it's going to create a buy opportunity around this range between the trend line, the lower band, and the 4 hour charts hidden divergence and 1 hour charts continuing divergence. Pay attention for this pair. From my point of view, great opportunity. This is dollar against the Singaporean, which from my point of view is going to create some interesting thing. There is a bullish regular divergence, so it has to push higher. But hold on, before that there is a kind of a bend-to-bend move on the 4 hour chart. It's pretty narrow, so it could push for duplication, and that will take us to the daily correction. But we need to pay attention, as it's also a hidden divergence right now. So on the 4 hour chart and the 1 hour chart there is a divergence that could take us slower before an up move. And why do I show that? Because on daily chart there is a divergence already, but if it pushes down for another low, anyway, do not get scared because of that, because there is a still monster divergence on daily on everywhere. And even if it makes lower low, we will get a whole move up again. The real up move though will begin only and only and only when this trend line will successfully be broken. Once it will be broken, then we could discuss about much longer up move for the dollar against the Singaporean. So that's the main things. And if you wonder what about the majors like the euro dollar or the pound dollar, I do not have any opinion. As I said, for me, every push up on the euro is a bluff. There is no real reason fundamentally for a strong euro, and they must take it down in order to recover. So every new high will be just a sell opportunity for me. The real thing should happen when the trend line will be broken and the 128, which holds several times in the past, right here, will be broken. Then 128, yes. Then we could discuss about a real down move. Before that, I keep bearish opinion. I stay neutral and just holding very small position for a long run. Nothing to do before. And the pound dollar is, well, finally moving, and as we discussed, there is a room to go for this trend line and maybe even the lower trend line. I was talking about the pound dollar for a long time now, and I still think 159.15, 159, or maybe even lower around 158 could be easily set as target, and that's what should happen there. Well, oops, that's not the chart. A few words about the Aussie dollar and Kiwi dollar. Well, I prefer not the Aussie dollar. I prefer Aussie pairs. For me, they seem much more interesting. Aussie dollar as Aussie yen on the short term is creating a bottom from my point of view. There are several supports right now. There is a potential hidden divergence. Why potential? Because it's still not created. And on the 1 hour chart, continuing divergence a bit lower could cause a beautiful buy and retrace up. But for long run, I prefer to stay out of that. Few words about the gold and the silver, which finally made a down move. Technically that's correct, but as I said, it's only and only to get prepared for a stronger up move right after that. Careful with them. There is a hidden divergence. It's playing around the bottom. There is still a room to go. It could go easily for 1710. It could go easily for 1685, but it's only to create a perfect setup for a buy. I'm still waiting a bit until I get the clear combination of the daily hidden divergence with the 4 hour chart divergence, which there is no yet. Same about the silver. There is a room to go, and it could take us to 31 even, but also it would immediately retrace and push higher as commodities do sometimes. Anyway, there is a room still for bearish, and if it reaches closer to 200 moving average, that's from my point of view a perfect jump in. I do think with a very small portion it's a good opportunity already to take a buy for silver and gold and just hold it for long run. And if it reaches the lower areas, just add more, as these commodities for a long run are going up. And well, be ready. Few words about the indices. Well, I've been talking about it a long time, and right now we can see that this perfect setup of regular divergence is taking us down, and the lowest target could take us all the way, the first target could take us all the way to 2550 here, right? 2550 approximately. Breaking below that, and I can say open the doors, as we are going for a long deep down move. Remember the monthly divergence, right? Monthly continuing divergence. It's monster, so it has a room to go. And the only, also the Dow Jones, as you can see, right? Everything has a beautiful divergences. Only question of time until we get something really, really bearish. Could it turn around and push first of all to new high before crashing? Yes, but the monthly divergence we already have, it provides well, probably the most perfect setup for long run. This is a bearish market. Do not get confused by that. And at the moment, when you will see more and more and more analysts talking about we are going up, everything, all the bearish scenarios are over, blah 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 blah. Perfect. That's the perfect setup. This bearish divergence, even if we get new high, do not get scared, do not get confused. Do not get confused, because it's only and only and only to provide then some real bearish crash. I will not be as pessimistic as many of them that it's going to create a new low. I'm just saying we are in front of a bearish period, and it will clearly begin once the weekly trend lines or the weekly wedges we have on the Dow Jones, for example, and the S&P, as you can see right here, when these guys will be broken, then it's officially opens the doors for something strong down. And again, I will not be confused ever by a push up or something if will happen, if any new high will be created. Don't get confused. Last one will be the natural gas, which is moving inside some channel. It could break it up and push a bit higher easily, but don't get confused, as there is monster daily divergence forming, so every new high will be just to create strong sell opportunity. So feel free and confidence to go for a sell for with investor style only for the natural gas. And my suggestion, take the further contract you could. I mean, not October, not which is end already, not November, December at least. The further the better. If you have January or February, go with that. Take this contract, and we are going to enjoy from a bearish period within several weeks. And yes, it could push a bit higher. It could play around the 375, 390 maybe even, just to create a perfect setup and then crash for something like 60, maybe 80 points. We are on a bearish period, bearish cycle in front of us. Stay tuned. Now, before we just in a few words, all the techniques as you see works time after time, again and again and again. And if you've paid attention to my post about Google and the blog, you see how powerful divergence is. And as you heard, probably, if not, there you go, I just came in with so far the most comprehensive and probably the best project to the net. This is Divergence University. Don't get scared by the word university. On this home study course, completely home study course, I share with you all techniques I have, all I do, how I do, why I do, when I do, and this is something that you could get and become a real trading master. And why divergence? Well, this is the site divergenceuniversity.com. Why divergence? First of all, you can pay attention for the result it could provide. This is from the club. I cover there extreme divergence, Bollinger Band's riding, Bollinger Band application, continuing divergence, Fibonacci secret divergence, hidden divergence method, regular divergence method, and much more. Secret number 3, which is the best filter ever before you enter any trade of a divergence. Well, it's all available for you right now on the home study course. This is Divergence University, and the word university means this is the most comprehensive, real course, and you can pay attention to what people already write. I keep getting amazing emails with well, the best comments I could expect, and I even did not expect such great comments. So don't stand behind, and if you want really to master the divergence world and to become a real trader, I announce that loudly, real trader, then you must get this knowledge and you must get this course. If you want to still keep playing around and learning and everything slowly on your on your pace, you are welcome. But if you feel that it's time for you to become a real trader, Divergence University is the tool for you. And I'm not just saying it because I'm the owner of that. I'm saying it because that's what people say. And I invite you, do not believe me, I encourage you, take it and you will see. And you will see. Give me the chance and you will never regret, because this course will change your trading life forever. Forever. We're working together and we're talking together, and I'm answering all questions, and I'm teaching and I'm mentoring exactly as I want, and we will become independent trader. That will be all, friends, for this weekly review, for this weekly trade opportunity we have. Pay attention for the OSIS pairs. Some of them are going to provide an amazing opportunities. Thank you very much for watching this video, and I wish you a wonderful weekend and good trade setup and good profits. Yours, Vladimir.